Hello, it's around 3 o'clock Central Daylight Time on May 29th, 2016. My last call came Thursday after the market closed. I said unless we gapped over this high, I thought it was trouble. I looked for a drop at least to 2087.86 and perhaps more than that. Well, we gapped up and promptly took out the high, which sometimes is good enough, but that's not what I said. I said we had to have a gap over it, so the call was just wrong. If we gap up sharply, I have a trading rule that says this gets much less likely to print, but that's not sharp enough for me. I'm just going to call this one wrong, and we'll just add this number to the list. It should print at some time. System doesn't say when. During the day, MEJT should ultimately lower prices would print. Here's the color-coded target. We got the minimum. We usually get more than the minimum. We did. When that happened, MEJT said it was a false move, that we would recover to this top blue line after this time, and we did so with the white dot. I don't have any new MEJT targets from Friday's trade. I have mixed signals from Friday's trade. The commonest occurrence when you have mixed signals is that we have a gap outside of the day's range, and the next most common occurrence is that we close little changed. Let's look at the positive things first. We gapped up, hit a series of new highs, and rallied all day long. That usually has follow-through, particularly before the weekend it has follow-through. Almost always you get spillover purchases on the reopening of the market, which is Tuesday. And if that does not happen, and particularly if we get a big drop at Tuesday's open, it's usually big trouble. So that's a positive. What are the negatives? Well, this is the equity only put to call ratio. You can see the ratio is hitting new lows we haven't seen all year long. In months, it shows an excessive level of public optimism. Public isn't always wrong, but it often is. Here's the McClellan oscillator. On the NASDAQ, we're over the upper Bollinger Band. There's no signal till you reverse through it, but if that happens, it usually marks a top. We have a wall of purchases into the close. We also have a Hobson close right at the high of the day. Often that leads to a gap down when the market reopens. What's particularly troubling here for the bulls is the timing of this advance. With under half an hour left to trade, we were under all these highs, despite having a gap up. Liquidity dries up right before the long weekend, and that's when prices started to rally with abandon. More often than not, it's not the smart money waiting until liquidity dries up to go long. This is the weekly chart. These lines are TDST lines. They're support resistance levels, and you can see that we are right at resistance. This is the trading range we've been in since late 2014. If you draw a Fibonacci grid, you can see that we have some support at the Fibonacci 14.6% level, and that Friday's trade was at the high right at the 88.66 Fib resistance level, so if we're going to stall, it's a reasonable place. It's possible that this trend line I had shown earlier is still going to hold. Usually when it's hit so many times, we break through it sometime, but doesn't always work. You can sometimes learn something by taking a Fibonacci grid and just ignoring the absolute low and ignoring the absolute highs. Let me slide this thing over. Didn't realize it wouldn't show. If you just ignore the absolute low and absolute high, I was hoping this thing would hold, because if you draw the Fibonacci grid, you can see all those delightful hits right at the 78.6 level, and 61.8 and 50 and 38.2, and even right here at the 23.6. And if you connect these two with the trend line, you can see how often where the trend line and the Fibonacci grid meet, that's where the market tends to gravitate towards. It's kind of a pretty pattern. If the recent high holds, the pattern will stay intact. So we have an interesting scenario for Tuesday rather. I suspect a gap outside of the day's range. If the gap is under this low, I really think we have all we need for a major top. If instead we gap up strongly, we've broken through very strong resistance, and a lot of the sentiment indicators I showed you with the public equity only put to call ratio and other things won't work. So Tuesday's open should be quite critical. I'm hoping for a gap under these lows and a big drop, but until that happens, nothing is guaranteed. Tuesday's open should be interesting, and that's today's call.